Have you ever tried to hold a beach ball underwater? This is not a beach ball. It's my daughter's little kickball, but you get the idea. You can push it down. You can suppress it, maybe even sit on it. But the second you let go, boom, it rockets back up. So that's exactly what's happening right now. Stocks are soaring since Trump tweeted it's a great time to buy. They're actually up 14%. And after one of the ugliest drops of the year, we've seen a massive rally, and it might just be signaling that lows for 2025 are in. Let's break it all down. Oh, you like that? Channel my inner Andre Miller. Bonus points if you remember Andre Miller. So back on April 2nd, the day after Liberation Day, markets tanked hard. And I'm talking more than a 10% drop in just 2 days. So fear and panic was everywhere. And you can see that by all the old videos that I was making from about a month ago. But just like that, with the beach ball underwater, when it finally shot back up, it ripped, okay? On April 8th, the S&P 500 was down over 12%, one of the worst one-month drops ever. And if you fast forward just 30 days, stocks surged over 13.5%. So that's the best one-month gain since the COVID lows in 2020. So if you go down here, you can see the S&P 500 index on a 21-day rolling return. You can see all these COVID dates, 2020, 2020, 2020. The next best, 5/8/2025, buddy. 13.7%. That's why during all those videos in April, I was telling you to buy the dip. I deployed over $50,000 buying the dip over the past month and a half, and now my portfolio is doing incredibly well, and this is what I feel like. I'm gonna come. So the best and worst market days are always clustered together. That's why I'm sharing this chart with you. So if you miss the bad, you're probably gonna miss the good too. We have 0 to 80% gains. We have 0 to negative 50% gains, and you can see the massive swings, okay? These are based on a 1-month rolling return for the S&P 500 from 1928 to basically current time at the time of this recording. So if you want to take a look at this a little bit more in depth, pause the video and take a look at this chart. And just to prove my point with the buy the dip strategy that I've been telling you for the past month and a half, let's take a look at total returns since Liberation Day, okay? This was April 2nd. So we all hold Fartcoin, right? It's a big holding of mine. Really? Who's buying Fartcoin? Really, guys? This is a mature investing channel, okay? But for those of you that have held Fartcoin, good for you. Bitcoin, 18%, Nasdaq, 6%, international developed stocks, 5%, emerging markets, 4%. Gold, 3%, even though it is hitting multiple all-time highs. It's hit about 55 all-time highs the past year. S&P 500, 3%. Bonds, still, a nothing burger. US dollar, minus 1%. And then crude oil, which I've been talking about in all my last videos, down 13%. So let's talk about Monday in the market. This was a massive day. Stocks soared after news broke that the US and China were cutting tariffs big time. President Trump hinted that tariffs could fall to 80%, and what we actually got was down to just 10%. That's a shock to the upside, and investors in the market loved it. The Dow jumped more than 1,000 points. That's only happened 3 times in history. So what's even more impressive is that the market closed near its highs, despite being short-term overbought heading into Monday. So that, to me, is showing real strength. Take a look at this chart right here. So stocks are less than 5% from all-time highs. So this chart goes back to 2020. 0% is basically your all-time high. And then if you look here, we were basically at 4.88% away from reaching those all-time highs again. So to me, this is showing real strength, and the buy the dip strategy, I don't want to say always works because the dip can keep dipping. And a lot of people are saying, oh, this wasn't the dip, blah, 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 blah. But as you can see here, we're only 5% away from all-time highs. Okay, so let's put this 13% rally into perspective. I'm taking a look at every time the market gained 13% or more in a single month, and it's only happened 13 times before. And in 11 of those cases, stocks were higher a year later. The only 2 losers were basically the early 2000s dot-com bubble, and then the last 4 times were double-digit gains across the board. So if history is any guide, let's take a look at this chart right here, and this rally could just be the beginning. So I'm going to zoom in a little bit, and then I'll show you the bottom of the chart. So again, S&P 500 performance after 13% in 1 month. So you can see here, this is basically returns over the previous month, 1 month, 3 months, 6 months, 12 months. And again, the two outliers were the dot-com bubble. We have 1999, and then we also have early May of 2001, excuse me. So after that, you can see all these other years were basically massive gains, except for like 2002 and 1988, which is just at about 6.5 and 6.7% respectively. But you can see the average is 17.6% where my cursor is, and the median, which is the most important in my opinion, is 15.5%. So again, did you buy the dip like I told you? Did you buy the dip like the president told you? Okay. He's literally tweeting, buy stocks. Now is a good time to buy stocks. And a lot of people were just so pessimistic or shook that they didn't. And now if we look at all the years since 1950, average 9.2%, median is 10.4%. Okay, so now let me hit you with something a little bit even more rare. So there's a technical indicator called the deGraff thrust, okay? Oh yeah. I told myself I wasn't going to do that. Basically, the deGraff thrust, wow, it measures how many stocks are hitting new 20-day highs at once. So, and when more than 55% of the S&P 500 stocks hit that level, like they did yesterday, it's considered a major bullish signal. So over the last 30 times this indicator flashed, the market was higher a year later, 29 out of 30 times. That's a 97% hit rate. So I can go all the way down here. I'm just trying to keep the font as big as possible. So if we look at it chronologically, you can see it happening from 1976 all the way to May 12th, 2025. And then if you look at the average return, 16.3, median 15.9, and then all years since 1950, again, 9.2, 10.4. So very encouraging in my humble opinion. This is very encouraging. And again, did you listen to your boy when he told you to buy the dip? Okay, a couple more slides, and then I want to get to the my thoughts portion of the video and the outro. And I do have just a quick little life update. Basically, I wanted to share this chart with you. So this is from Charlie Bolello. He shares a lot of good stuff. This was from this morning at 10:37 a.m., May 13th. Basically, he shared this chart showing that we've been up 22% since April 7th, for April 7th's low to where the stock market is right now. So again, you guys, I know dips like this look scary, but again, all it takes, I've been telling you this in my last videos, all it takes is one tweet. It's unbelievable how volatile these markets are, you guys. So is that something that I want to be invested in? Obviously, I understand the game and I play it too. Okay, that's why I buy Bitcoin and gold. But you know, the chart is going to keep going up and to the right. This is what I've been telling you on my channel for the past 7.5 years. Okay, nothing stops this train. Now, if we go into this chart right here, I do want to talk about just asset classes total return since 2011. And basically, this was updated May 9th. So again, it's not going to reflect what's been happening over the past 2 days, but it is still pretty accurate. So I know the font is really, really small. And if I zoom out more to get that last chart with the cumulative and the annualized numbers, I'm just going to have to cut off some of the charts so you can see this. Basically, you can see here that for 2025, the highest returns have been gold. I've been telling you this in my videos for a couple months now. So gold is at 26.7%. These EAFE stocks, 13.7%, Bitcoin, 10.3%. And then everything else is pretty much single-digit returns. And then this still has the SPY at negative 3.4%. So that's no longer true. SPYs actually break even year to date, or just down maybe like 20 basis points at the time of this recording. But if you look at the cumulative return, SPY is at about, let's see here. Sorry, there's so many lines. It's hard to read this on my monitor. It's almost at about 500% with an annualized of 13.1%. Then if you look at, shoot, am I reading this wrong? Dude, am I going crazy? Am I getting old? Is this what getting old is like? I have to literally drag the cursor across the screen to keep it in the right row. Yes, I'm right. 482% cumulative since basically 2011, 13.1% annualized since 2011. And then underneath that, we actually have QQQ, which is the Nasdaq 100, which is almost at 1,000%. It's at 919%. And 17.6 annualized. And then if you look at Bitcoin, we're at 3,432,000, actually 34 million, sorry, 34,327,467%, with a 143.3% annualized return. And there's still people that literally unsubscribe from this channel since I've been telling you to buy Bitcoin since 2017. But that's okay. It's okay. You're going to be working until you're 85, and that's okay. I'm okay with that. Not laughing at you. I'm laughing with you. It's like Rodney Dangerfield in Caddyshack when he goes, "Oh, this hat, that's a terrible hat. Oh, it looks good on you, though," when the judge is wearing it. I don't know if I could put it in the video due to copyright stuff. But anyway, real quick, do want to get into the sponsor of this video, you guys. At the time of this recording, gold has outperformed the S&P 500 by over 22% year to date. I buy all of my gold and precious metals from JM Bullion. I've been doing so for over 10 years. I always allocate a percentage of my net worth to gold, Bitcoin, bunch of stuff like that, trading cards, collectibles, things like that. I use that as an insurance policy on the rest of my equities portfolio. So obviously during times of unprecedented money printing with M2 money supply just going up and to the right, why do you think stocks are doing what they're doing? Why do you think Bitcoin's at 104,000 at the time of this recording? That's because of M2 money supply, baby. So obviously my inverse bet to that is with gold. So they have over $11 billion in precious metals sold, more than 6 million deliveries completed, and they have over 400,000 customer reviews with an average rating of 4.8 out of 5 stars. So basically what I'm trying to tell you is join millions of satisfied customers who trust JM Bullion the same way I have for 10 years now. Make sure to use my link in the description so they know that I sent you. Happy stacking. Thanks for sitting through that, you guys. So what is the point of this video? What is the bottom line? So obviously my beach ball analogy, even though it's more like a dodgeball or a kickball. That's what I meant to say, not dodgeball. It's a kickball. Dude, I used to destroy kickball. I played soccer since I was literally 5 years old. I'd be the best player, just blasting these balls out the park, at recess, at gym, whatever. I don't even know why I'm talking about this. So the bottom line of this is don't let short-term fear shake you out of long-term opportunity. I've been telling you that on this channel for 7.5 years. Markets are resilient and they often bounce back stronger than people expect. Again, the reasons for that: U.S. dollar dominance. We're the world reserve currency. We have the deepest capital markets in the world, military, petrodollar, all that stuff. Until that starts to deteriorate, I'm buying VTI hand over fist, okay? So if you're investing for the long haul, this might be the time to actually tune out the noise and stay the course. Again, if you got value from this video, make sure to just gently click the like button, gently click the subscribe button, turn on the bell for notifications, okay? And then also in your app, make sure you have notifications. That way you can actually see them when I post the video. And share the video with 13,000 friends. Thank you so much for watching. And as always, have a prosperous day. Okay, so the reason I didn't post for a few days was because I was actually in California. So listen to this. Usually I end these videos on a funny note, but I got to share this with you guys. So my dad and I, we've been buying and selling cars for a long time. We usually buy desirable / rare / stuff that's on like Bring a Trailer. Okay, that's the kind of stuff that we buy. We drive the car for a few years, buy it right, and then either sell it and make money or, close to break even. So anyway, dude, I've been looking at cars my whole life. I know what to look for. This guy, 87-year-old seller, I actually tweeted about this, maybe late April, early May. 87-year-old original owner. It was a 2013 M3, last year of the V8, okay? And probably the only V8s they're ever going to make before everything becomes hybrid and completely regulated and turbo 2-cylinder, turbo 4-cylinder. Everything sucks now, okay? And everything's going electric, which just sucks. No soul, no nothing. Anyway, I digress. Perfect maintenance history. I checked the Carfax, did everything. I had a Google meeting with the guy. He was so old, he didn't know how to flip the camera around on his phone. He literally turned the camera around to show me the car. Everything looked great. Everything checked out. Maintenance history, 5,000 miles. I called the dealer, talked to, everybody there. Great car, right? I get there. I fly across the country to San Francisco, certified check in hand, ready to buy this car and get it shipped closed container across country back to where I live. Dude, I get there, drive 2 hours down to Monterey from San Francisco, take Pacific Coast Highway 1, great drive. And shout out to Ask Sebi, shout out to Humphrey Yang, met up with them, had dinner with both of them. It was a great time. And then I go see the car, dude. Ready. I start asking more questions after I notice some stuff. And he's like, oh yeah, this woman backed up into me in the parking lot and blah, 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 blah. I couldn't believe it. Cause usually when you see original owner, 87-year-old guy, doesn't know how to use technology. It's like buying real estate from a guy with a AOL.com domain. Okay. That's where you're just like licking your lips. Like, yes, I'm buying this multifamily property from a guy with a at AOL.com email address or at Yahoo, you know? So same situation when I got there, ratty, dude. Not like ratty, but to my standards, it was ratty. Usually we buy stuff that's, you know, somewhat clean for a good discount. And then we just, you know, own it, clean it up, and then make money on it. And then I couldn't believe it. Complete waste of a trip. It's not like I drove 10 minutes down the road. Dude, I flew across the country, right? I have a wife and 2 kids. You know, I spent, 3 nights out there. But anyway, it wasn't a waste of a trip. Met up with some other YouTubers. It was fun. But the moral of the story is that you can invest in other asset classes outside of just, stocks, bonds, real estate. My dad has actually done very well for himself flipping cars. And he's just a hobbyist. He's just a mechanical engineer, just the guy that likes to have cool cars, and he usually breaks even or makes money. So I don't know why I told you this story, but there will be more videos coming. I was just traveling and very busy, and there's other like health related stuff as well. But your boy's here to stay. Thank you for watching. Peace. Bye.